Nila Sweeney, welcome to Property Insights. How you going?
Good, thank you. Thank you for having me.
It's so good to have you on the other side of the table because normally you're
Indeed.
interviewing me. I want to interview you now. You all right with that?
Yeah, yes, please.
Well, I'm actually quite fascinated. So our team has organised you to come into Property Insights to talk about the property market, which we will do. But I'm sort of interested in your background a little bit. I can tell that from your slight accent that you weren't born in Australia. So where were you born?
Yeah. So I'm from the Philippines. And after college, I went to Hong Kong and worked. And I stayed there and worked there for about 18 years. And did about 10 years in TV, actually.
TV?
Yes.
Like a production, TV production? Or
Yes. I was a producer at, first of all, CNBC and then CNN.
Oh, wow.
Yeah. So.
That's cool. But now you're a reporter, a property reporter for the AFR, Australian Financial Review. And I read your stuff, and you've interviewed me a couple of times as well. And property reporting is sort of quite a specialised area, particularly in Australia. It's like it's a pastime in Australia. Australians love property market. Having lived in Hong Kong and worked in Hong Kong, how do you feel that Australians are relative to properties? Is it such an obsession that everybody keeps talking about? Do you think relative to a place like Hong Kong or Philippines, for that matter, that Australians are obsessed with property?
Yeah, in a way, Hong Kong people are also obsessed with property. I mean, the place itself is, like a lot of buyers even in Australia are from Hong Kong. So in a way, they're similarly obsessed. But Australians in particular, I started working in property since 2005. And I think I started talking to you around that time. Then so it's a long time.
Yeah, correct.
So I've seen, several cycles in the property market, and even during downturn, people still hold on to their properties. It just goes to show how the Australians property owners themselves are really quite determined to hold on to the property no matter what the market is doing, and they are obsessed. Like it's like I've like over the time that I've covered property, there's never been a cycle, even if the market is down, especially when the market is down, that people are so keen to know what's happening.
Yeah, it's very interesting. So because the AFR being the lead financial newspaper in the country, if they dedicate and have dedicated for as long as I can remember, a whole part of the newspaper to the property cycle. In fact, the AFR dedicates inserts to the property market as well. And I can go back to the late 90s and even beyond that. Property or newspapers only reflect the demand from society. And society in Australia, reading the AFR, that is, those readers, are always interested to know what's going on with our property market here in Australia. So much so that now, they have dedicated sections, and you're one of those people in that dedicated section. What do you, and you said something very interesting a few moments ago, that Australians are determined to hold on to their property, no matter what the cycle is. As an Australian now, having lived in other countries, what do you reckon it is? Why do you think Australians are so determined to hang on to their property, no matter what the cycle, up or down? Why are we obsessed? I used the word obsessed before, but why are we so keen not to sell our property, and why are we so keen when the market's in our favour to go and buy? What do you reckon it is?
Yeah, I think I guess it's just sense of I think it's probably cultural, as well as if you think about it, it's like it's your sense of security and even identity, so to speak. Like like it's a source of I guess like a sense of you made it, a source of your wealth in some ways. And having covered like property investment as well, is like like when you have property, it means that you can make money, and so like everyone wants to get into property because it's a way for them to either secure their future as well, and to obviously build up their wealth.
And that sense of status.
Yeah, and that's a status. Yeah,
So that status sort of thing is pretty powerful in this country, and it actually makes people do all sorts of things when they're under pressure. They will work 2 jobs, they'll work extra hours in the current job, they'll stop spending money on whatever it is they're spending money on just to make sure their mortgage stays all right, because Australian status around losing their property is sort of bolted onto us from a very early age by our parents. I know it happened to me. And there's, as you said earlier, sort of like a sense of pride. I deserve to have a property. But we now look at the way Australia is going at the moment, that we have a whole lot of young people. When I say young people, people in their 20s who think to themselves, I may never get a property. I may never be able to get this status that my parents had and my older friends and cousins, uncles and aunties have had. Are you worried as a journalist? I mean, you seeing much more evidence that Australians, younger people, can't afford to buy into real estate, and then therefore getting put into this rental market and are now getting hammered by the high excessive rents that are being charged by landlords? Are you seeing that? And what are you guys at the AFR thinking about in this regard?
Well, obviously, it's a concern. I mean, affordability, both from buying affordability and rental affordability, is really worsening at the moment. And then, like you said, fewer young people, especially, are being able to get into the property without any help from parents, or third-party equity. They like other people helping you to
put the deposit in.
So fewer and fewer people, young people especially, are able to get into the property market, and so that leaves them being trapped in the rental market, which is also very difficult at the moment. The rental supply is still quite tight, even if vacancies are starting to rise a little bit, but it's still really tight and rents are still rising. So I think from our point of view, we're laying out all these issues and, urging, solutions coming from the government, from the industry, and so on to just tackle this, because it's been going. It's not something like it just happened because of COVID. It's been going on for a long time. We've seen it even, during the GFC, or even, like decades ago. It's been happening. And so it just came to a head, so to speak, at the moment, because, you have all these things happening with COVID, and then the migration, and then the rapid interest rates suddenly,
it's like a perfect storm.
Yes.
It seems to me that in order to tackle the affordability of new housing for people to buy, and or the affordability of rental property for people to rent, it comes down to supply.
Like you said earlier, potentially politically charged. No one wants to, say something that might endanger their
ability to get re-voted in.
Exactly.
That's what it comes down to at the end of the day. I mean, we need some hard decisions, but like on one hand, government doesn't want to say, let's do more developments and let's do more approvals, because they'll upset people who live in the area. Someone might be living across the road here and they don't want to see, a block of apartments be built across the road or down the road. They don't want the roads to become choked with more traffic. They might be living a certain life. They just don't want change. But on the other hand, we have to have change in order to have a greater supply. Because, and if we don't have a greater supply, we're going to have people who are going to be suffering rental crisis. In other words, they can't afford, or alternatively, they can't afford to buy either. And so it's a bit of a catch-22. And I don't really know what the solution is. And maybe not, the AFR Summer is an important platform, because everybody respects the Financial Review. And that's an important platform. But somebody's got to make a move on this stuff. And I don't really know whether or not industry people like me can convince anybody, because the government's more interested in who's going to vote for them and who's not going to vote for them. So it seems to me a really difficult thing to do going forward. Have you ever seen it in your years as a property writer? Have you ever seen it as acutely important as it is right now?
I thought it was already difficult, it was already a big problem, a few years ago. But seeing now this rapid interest rate, I think it just highlighted, it just brought to open, the issues that people are facing with regards to housing affordability. Politicians obviously don't want to make drastic decisions and so on, and the industry has been crying out for more supply, more just the ability to build more and so on. So it's definitely a lot worse this time around, and it definitely needs more urgent decision. I don't know whether that's going to happen anytime soon, but definitely it's definitely needed at the moment.
So we go to let's look at the Reserve Bank then.
Yeah.
The Reserve Bank's remit is not to look at property prices. They don't look at any asset class prices, although I think they do, but they're not supposed to in any one in particular. But where do you guys think, and I know you talk to lots of people, where do you guys think this is all going to end? Do you think that the interest rate increases are finished? I mean, obviously subject to all the data, but do you think we're at the top, or do you think, from the people you talk to, do you think that the interest rate, we might be at a period getting close to when interest rates might start to reduce, or do you think that we're just in a holding pattern right now? Where do you think we're going at the moment, given all the people you get to talk to?
Yeah, based on the economists and the experts that I speak to, including yourself, the consensus seems to be that the RBA is on hold for an extended period of time, and they may start reducing mid next year. Yeah, the consensus is that it's going to stay on hold for now, but it also depends on what happens with unemployment. Like you and I were talking earlier, if the economy weakens and unemployment rise substantially to a point where, mortgage holders, property owners are starting to buckle under the strain, then maybe that will prompt the RBA to look at reducing interest rates.
Yeah, and it's an interesting conversation because the new Reserve Bank governor has put out a couple of reports where she consistently refers to the unemployment number in Australia increasing from what was 3.5 when she wrote it to 4.5%. That's about 140,000 people will lose jobs. It's a pretty rare thing not to see unemployment increase during interest rate rise periods. Normally you would see it automatically, but it's been fairly stubborn this period. And we've seen 400 basis points increases. That's a lot. It's a huge increase. Yet unemployment is still at 3.6 or around that territory, very, very low, extraordinarily low. Surely, don't you reckon that something's got to give? Unemployment's got to go up. I mean, what do you reckon? I mean, I just can't understand how it hasn't. But what do you think is the reason why unemployment has remained so stubbornly low? Why are employers why were they anyway, racing around continually employing more and more people? What do you put it down to?
Yeah, I think because there was still a lag from, the impact of those rate rises that we've seen, since last year. And so it's still feeding through the economy. And so even if it has risen by, say, 4 percentage points since then, a lot of people are still not feeling it, so to speak. And the economy is still relatively strong, considering. And so some businesses are still needing to employ people. But it comes, there's only so much that people can, sort of hold on to. It's like if even now, if they are paying a lot more on their mortgages, but if they still have a job, then they don't have to sell. And so that's why, we're not seeing this massive drop in prices. There's a lot of forced selling that we're seeing because people still have the job. But when they start losing their jobs, then, that's when supply is going to rise. And I think that's when the property market weakens as some people are expecting.
So that we should we probably, what you're saying, we probably would see an increase in supply, because if people lose their jobs, they can't afford to pay their mortgage, so they have to sell the property. They've got no choice. Or if people all of a sudden feel as though they can't work 2 jobs because the business they're working for is not doing as well. They say there's not a second job, or there's not extra hours. So all of a sudden we start to put the pressure on borrowers. We should see greater supply of properties on the market for sale, in which case property prices will probably come down a bit, hopefully, or at least stop rising at the current rate. Because the losses that we saw in the national average of properties, the losses that we saw have sort of been clawed back a little bit this year in 2023. I mean, we've been seeing like nearly 1% rise nationally per month, nearly 0.8, whatever. It's slowed down a little bit. It's just so weird, given it's sort of a total anomaly, given the rapid interest rate increases that we've seen. It's a total anomaly that house prices have remained so resilient. And what do you think the Reserve Bank must be thinking to themselves in this environment? The new Michelle Bullock, new RBA governor, what do you think she's thinking to herself? My God, how am I going to stop this confidence in the property market? I mean, what do you reckon is going through their heads? Because this is such an unusual event.
I don't know what goes on in her mind. I can only speculate based on what I'm seeing. I mean, it's a tough time to it's a tough period for the RBA governor to try and manage inflation, because they keep telling us it's not their remit to control house prices.
Yeah. They say that, but I know they think about it though.
But indirectly, what they're doing is impacting the housing market. So the thing at the moment, like you and I talk about, is that households really have the ability to still, they don't have to sell. And so we're not seeing this massive forced selling happening in the market. They don't have to sell because they can hold on to the property at the moment.
So then what we're talking about now is one factor, unemployment. If the only thing that affects a reason why someone has to sell is if they can't afford to live there anymore. And clearly right now they're managing their affordability by working extra hours or stop spending some money on something or other, getting a second job, or asking for more money from their boss. But if unemployment becomes an issue, in other words, goes up, then that factor maybe could affect the amount of properties that come on the market for sale. Maybe, would you agree that the Reserve Bank is hoping that their interest rate rises will have an effect on unemployment, such that unemployment then can start to manage the wealth effect of how wealthy we feel, therefore how much money we spend? And how wealthy we feel a lot of times is dependent upon how much our house has gone up by. If we're sitting around, we've got a house going up every month, we feel pretty rich. And then we say, that's okay, our house has gone up by 10% this year, let's go on a holiday. Let's go spend some money. Let's go to Queensland for our, Christmas time. And they start to spend money again. But if all of a sudden my job's at risk, I might say, wait a minute. If unemployment numbers going up and people getting sacked around me in my office environment or my work environment, maybe, do you think that psychology might start to make us think a little bit and start make us pull back on our spending?
I mean, there are already signs that people are spending less. I mean, retail sales data is showing it's already weakening. So yeah, definitely. I mean, if people see, even it's on paper, because you don't really realize how much you make on your property until you sell. If they read from articles that people write like myself, that prices are going up by this amount I think since the recovery started in February, I think the national property prices have gone up by like 35,000. And so people suddenly start feeling more confident about spending. And they said, well, even if, if interest rates are rising, my property values are still holding. So, and I still have a job. So that sort of like probably make it harder for the RBA governor, to sort of like control the inflation if people feel they're not impacted so much by the interest rate rises because of the strength in property values. Then that will not reduce spending as quickly as possible as they wanted to.
Which then that's sort of like goes back to your earlier point. Then, therefore, if that is the case, in other words, people don't feel as nervous as they did at the beginning of the year, and they're starting to see increase in the value of their property, and they're still spending a little bit, not as much as they were, but a little bit, still spending quite a bit, but not as much as they were before. That goes back to your early point that really that means we're going to be in for a long interest rate hold period. So we're not going to see rates come off. We're going to see these high interest rates, relatively speaking, high interest rates, stay where they are for a period of time until they start to bite in to inflation and our spending habits. And so long as house prices keep ticking up, that just tells us how much longer these high interest rates are going to be maintained for. Would you agree with that prognosis?
Unfortunately, I do, because like you said, everything feeds through the housing market. It's all for a property owner. All the spending, all their expenses, all their plans and so on is rooted in their property holdings. So if they feel that they can manage it, then they can go on spending, and maybe in that way it feeds through inflation that will stay higher for longer, and so the RBA may feel that they don't need to cut interest rates sooner. But then when we see unemployment ticking up, then that may be the point where they may have to review it.
So probably the final outcome of all this is that, unfortunately, we need to see unemployment rise in order to see interest rates reduce. We need to see the unemployment number go up, and which is what Michelle Bullock has been suggesting, that we need to see an unemployment number around 4.5%, and they're going to keep driving or holding rates until we get to that number, so that we can control inflation. Because at the end of the day, the Reserve Bank is 100% committed to controlling inflation. They've said it a million times. They remain resilient in their purpose to control the inflation number, and right now it's way too high. I mean, the recent numbers came out, they were pretty good. They're coming down, but they're not where they want them to be. So, Neila, your final say on this, I mean, I'll give it to you. What do you reckon? Do you reckon that, I mean, you talk to all the economists from everywhere. What do you reckon is the most likely scenario before we start to have a look at interest rate reductions? Are we talking late next year or early next year? Some people are saying March. I mean, at one stage I heard people talking at the end of this calendar year. Westpac been saying, later in the calendar year 2024. Where are you landing as a property writer? Where are you landing?
Well, as a property owner,
and as a property owner as well,
I would like them to cut rates, early next year or as soon as possible. I don't want to be paying this much mortgages anymore. But based on my conversation with economists, it seems to be that the consensus is mid to second half of next year, which makes a lot of sense, because they still need to see the impact of those previous rate rises feed through and see how that will impact the economy and unemployment and so on. And so I think that's where we're gonna see the rate cut move happening.
Nila Sweeney, thanks very much for coming on to Property Insights.
Thank you for having me.